really, we look at a market that is weakest at the top and tighter as you move lower in price. We tend in real estate to brushstroke everything, everything's the same, but really we have a significant oversupply in the high cost, high tax markets in California, New York specifically.
What's the range here that we're talking about?
We're talking about, in terms of price range.
Price, yeah.
Yeah, price range. So the top end of the market in New York, the top 8% starts at around $5 million. And in California, it's about half that. And both markets are seeing a slowdown or a significant slowdown in activity simply because buyers are there, but sellers are anchored to pre-SALT tax conditions.
You know, let's go to what Natalie was talking about, these loans that developers are taking out in order to keep good on all of their debt. It's basically a revolving door of money here.
Very popular.
It's very popular in order to avoid having to sell their condominiums at fire sale prices. Is this going to work?
It will up to a certain point, but you can't delay the inevitable. I do think that we have still a lot of correction in front of us at the very high end of the market. We've seen, specifically in New York at the very high end, we've seen discounts averaging about 25% off of prices that were set in 2014-15. So we really had a correction at the very high end. The middle and entry level, we're not seeing that sort of discount.
How much further downside are we going to see at the high end?
I wouldn't be surprised if it's another 10%. We have a lot of things going on local to New York with the mansion tax and all kinds of anti-development sentiment within the political zeitgeist that could be a real headwind for these properties to move.
When or does it trickle down to the middle and lower end of the spectrum?
Well, I think it is almost, you could almost say it's happening now, but the sharp drop in mortgage rates over the last year, just full 1% drop, has mitigated some of that decline. I think the market today would generally be weaker overall if we didn't have the drop in rates.
Is there any place when it comes to cities that are actually seeing price increases or some kind of optimism? Because we've been talking about these weaknesses for a while now.
Sure,
right?
Sure. Really what we're seeing now is in low cost or no tax states like Texas and Florida, South Florida in particular, we're seeing activity or sales levels rise, which is in contrast to what we're seeing on the East and West Coast. We're experiencing, those markets are benefiting from this migration from high cost to low cost.
I'm wondering how much this is being framed incorrectly and how much cities in the United States just generally are perhaps getting a little overbuilt given the fact that the population of the U.S. is not growing that much. I mean, how does the population factor into this?
Well, it's interesting because we've had such low cost of capital over the last 5-6 years post-financial crisis that we've been building, but what we've been building is the wrong kind of product. We've been building skewed to the luxury or high end, whether it's rental or purchase, and we haven't built the right kind of starter product. So what's happening across the U.S. is prices, just like we're seeing in New York and in California, LA in particular, we're seeing prices rise for first-time buyers, and it's reducing affordability because we're not adding to the housing stock low cost or affordable housing.
So people are going to rent forever, basically.
Well, don't say forever, but certainly the rental market is booming right now, and we're seeing real strong price growth in these cities that are having weak luxury sales activity.